And while we're at it, let me welcome Ruchit Jain as well, who's the lead research at 5paisa. Ruchit, talk to us about how you are looking at markets and what kind of a move do you see, or rather, what do you make of the move today?
Yeah, hi, very good afternoon. Well, in fact, no, yes, we do have that policy tomorrow, which would be very important to watch out for. But technical structure, if I see, then there is the trend for the market continues to remain positive. During last week, we witnessed a gap up opening on Monday, when there was some clarity about that U.S. debt ceiling U.S. debt ceiling uncertainty was over. And post that gap up, we witnessed a range bound session for about 7 to 8 trading sessions. Now, today the market has again resumed up move after that consolidation. 18,450, 18,500 has become a good support base entire consolidation of last few trading sessions. Secondly, if you look at the options data, then for tomorrow's trading session, I think it's very nicely placed that put writers are quite active in both Nifty as well as Bank Nifty. 18,600 put option has highest open interest in the Nifty, and 44,000 put option has highest open interest in Bank Nifty. So all the data are indicating that market's momentum is likely to continue. The broader markets have also been doing well, although mid caps have reached that overbought mark. But it happens many times that when we are in a very strong trended phase, market continues its up move for some time in the overbought zone as well. So until we see any kind of reversals happening, there is 18,500, 450 support range for Nifty or 43,700 for Bank Nifty. Until these levels get breached, I think the positional trend would continue to remain on the positive side, and hence we are advising our clients as well to continue to trade with a positive bias.
Okay, positive bias stays for the market. But Ruchit, if I had to ask you, which is that top sector which is going to lead the market from here on, what would be the answer? Because you have the FMCG stocks which are doing well, a lot of auto stocks are sitting at life high, and pharma too is seeing quite a bit of traction now.
So I think these outperformances are likely to continue. I think auto space have specifically witnessed quite good volumes in the recent past. Many of the even FMCG names, if we see earlier, it was only ITC which was majorly leading the sector higher. But the other stocks too have joined now. Look at HUL, Britannia, Kolpal. Most of the some of the FMCG names have also joined the party. So I think these outperformance is likely to continue from these sectors. But I think one should now look for some of the sectors which would take a leadership going ahead. And I think two of the sectors would be banking, because Bank Nifty has managed to hold above its 20 days exponential moving average. And if you look at some of the heavyweights within the banking space, then HDFC Bank is trading quite close to its support after this recent corrective phase. And even ICICI Bank is trading quite close to its previous swing high resistances. So which once broken out, I think HDFC Bank, ICICI Bank, Axis Bank has already given a breakout. These private sector banks could take the leadership to take the market further higher. And apart from banking, I think for reversals, one can look out some for doing some bottom fishing in the metals name, where a decent underperformance have been seen. But today in the second half, many of the metal names have again started witnessing some short covering moves. So I think metals would be another space where some kind of bottom fishing could be done over here.
Right, Ruchit, and your top picks, if I can ask?
Yeah, so I'll start with the metals itself. One of my pick is from the metals, which is Steel Authority. Decent consolidation has been seen in last 1.5 years. Now the stock is on the verge of a breakout from that consolidation phase. And what we have seen, the theme which is working out, that the PSU names which are giving good dividend yield, those stocks are witnessing good buying interest, in last few months. So I think SAIL is another name which falls into that category where dividend yield is quite good. Good amount of consolidation has already been seen. So one can go long on SAIL from a short-term perspective with stop loss below 82.50 for potential targets around 89 rupees. And within the mid-cap space, Century Textile is another name which is looking quite prominent. Price up moves have been supported by good volumes. The corrections or consolidations witnessed lower volumes. The 20 EMA support is still intact. So we are expecting another leg of up move in Century Textile. This is for short-term traders. One can go long with stock below 773 for probable targets around 855.
On that note, we let you go. Appreciate you joining us on the show today.